Horlicks Network 18, Mission Poshan, Bhavishya Roshan.
Welcome back. 10,640 for the Nifty. Advanced decline ratio is being maintained. Bajaj Auto is having a good session, so up 2.5% for that stock. Month to date, it's up around 6% good. Sales figures which came out for the month of May, so we have seen that momentum come through from that time. And separately, a couple of other stocks include something like an India Bulls Housing Finance. It had a tough session yesterday, in fact lost around 6% this month, so seeing some amount of a comeback today, up around 2% even ahead of the RBI policy. Ashwani Gujral joins in to discuss the technicals of the market. Ashwani, hi, over to you then. For the Nifty, what are you recommending, as well as for stocks specific?
See, on the Nifty as well as Bank Nifty, the pullback is for the moment sustaining, and given the way financials are moving, it appears they have kind of discounted a hawkish commentary, etc. So it's quite possible that whatever happens in the afternoon, Bank Nifty goes up. So that way, given that yesterday was a narrow range, today is a narrow range, you could have sharp movement on the upside because the way banking stocks overall are moving, it looks like they are looking for a cause to cover shorts. Similarly, on the mid-cap index, what we are seeing is that certain quality mid-caps like Avanti Feed or Thirumalai Chemical, they have had vertical 50%, 60% crashes, and from there now they are showing some amount of strong buying. So that's where the first buying in mid cap can happen, and even a small kind of a pullback. The 200-day moving averages are 40% higher than current prices. So even if it's a pullback and a retest of 200, even then there's a 35-40% upside. That'll happen at some point because mid-cap space will also go through a 3 to 5 day type of correction, and hence these stocks will rally fairly hard. Having said that, I think PSU banks are kind of going strong into the policy. So Canara Bank is a buy with a stop of 250, target of 268. SBI is a buy with a stop of 262, target of 278. And BOI is a buy with a stop of 92, target of 101. This does not change the overall view, but today is the sort of day where short covering may happen, and possibly from tomorrow again global cues etc. take over. So that way going positive into the policy may be a good idea.
Ashwani, so you said this doesn't change anything in the sense, so mid caps will be troubled even after this pullback, however meaningful you're saying.
Yeah.
Okay. But those pullbacks in the case of Avanti, etc., you're saying can be very meaningful. 200 days, 30-40% from where they are right now, and these stocks are up 10-12% right now.
Yes, these are extremely oversold. What happens is when a 200-day moving average is either 40% lower or 40% higher, that kind of denotes an oversold or overbought zone. And today we are getting the first indication that that oversold zone, strong buying is coming back, because you can't have a 12% rally without any sort of big buying. And you have margin of safety in case, say, yesterday's low gets taken out, you are losing 1 bar. But if it starts to work out, you'll probably have 15 bars on the upside.
Okay. All right, Ashwani, we'll speak to you in an hour from now. Thanks very much for joining in and taking us through all of the technicals on the market. 10,654, so that pullback is continuing for the Nifty. Good going, up around 59 odd points. Before we slip into a break, however, here's a quick announcement. Network 18 and Horlicks are proud to launch India's biggest nutrition campaign, Mission Poshan, with Amitabh Bachchan for a nourished India. Did you know that India has the largest number of undernourished children in the world? Come join this initiative and support our cause for a healthier India.
So the market's sort of racing ahead, 64 points now, 10,658 is where we are at. And the mid-cap index is up 0.6%. So, I mean, the gains are in line with the Nifty, but there's a fair bit happening. So after days of correction, there is finally recovery and bounce which is happening. Avanti, Thirumalai, IDFC. Actually, put up IDFC Bank. IDFC Bank was up 3%, 3.5%. It's up almost 6% now. So there is, some sharp bounce which is happening as we speak right now. So it corrected about 36 odd rupees or so. It's back above 40 and it's going. News of we spoke with Rajiv Lal earlier in the day. Rain Industries is up 4%. So 209 on Rain Industries. If you can look at D-Mart, that is Avenue Supermarts, 3.5% there. That is Rain. Bajaj Electricals sold off 8% in the last hour yesterday. That is coming back about 3.5%. Graphite and HEG both are up 4 and 3% respectively. Idea is up 3%. Capital First is up almost 4%. So, and I'm just reading stocks with decent-sized volumes. I'm not looking at thinly traded stocks really. If you do that, you'd find a lot more names. And we'll sort of keep looking at some of these as we go along. But let's stick with that part of the market, which is mid-caps. Ajay Tyagi is EVP and Fund Manager with UTI Mutual Fund. He's joining us on the show right now. Ajay, good morning. Good to have you with us here. Where are we at as far as this entire mid-cap pack is concerned? The overarching reason that... people have been blaming this advanced surveillance thing, SEBI moves to increase margins, etc. But the big one was always valuation difference. Mid-caps and small caps having run very, very high over the last couple of years. So where are we at if you've looked at numbers recently?
Sure. So I think let's keep that as the starting point in terms of our narrative around mid-caps. So let me give you some data first. If you look at the last 10-year valuation charts, you'll see that Nifty 50 has traded at about an 8% premium to Nifty Mid-Cap Index. And where are we today? It's actually the reverse. Today, Nifty Mid-Cap is trading at about a 16% premium to Nifty 50. So there's a swing of about 24%. And let me remind you that in January of this year, which was pretty much the peak of the mid-caps, the valuation premium of mid-caps to Nifty 50 was 25%. So what was supposed to be a 8% discount to Nifty 50 had turned into a 25% premium in January. Even after the correction of the last few months, they are still at a 16% premium to Nifty 50. Another way to look at it, if you look at from a more absolute basis, again the last 10-year data, Nifty 50 has had a PE of around 15 times 1 year forward. Today is trading at around 17.5 times, so about 15% give or take premium to its last 10-year average. And Nifty Mid-Cap has had a 10-year average PE of around 14.5 times, a little less than Nifty 50 as I mentioned earlier, but today is trading a little higher than 20 times. So Nifty Mid-Cap, even after the correction today, is at about 40% higher than its last 10-year average valuations.
Okay.
So
Ajay,
the surveillance system or not, one thing which is very clear fundamentally to us is... Yeah.
Go ahead, complete your answer.
Yeah, so I was just saying that we could find reasons to draw a narrative around why mid caps have fallen in the last 3 or 4 days, but I think the data is very clearly pointing towards the fact that even today, after the kind of carnage we've seen in mid caps in the last few months, they are trading at a huge premium to their own history, and of course also to the top 50 Nifty 50 companies in the index.
Ajay, are you saying that there's room for a further correction in mid-caps based on the valuation premium?
Exactly. So I think there is room for the mid-caps on a relative basis compared to the large caps to witness more correction. And let me also, try and connect these numbers to how, they connect back to intrinsic value of businesses and cash flows and so on. The fact is that the last 4 years we've seen such a sharp rally in mid caps, and it was premised on the fact that these companies would see growth coming back because there was an expectation that earnings revival would happen. Now, although those expectations were there even for the Nifty 50 companies, but whenever a revival happens, the smaller companies get benefited in 2 different ways. One is operating leverage, because these are typically companies which operate at companies which operate at lower than average margins, the pricing power is not there. So when times are a little more comforting and sanguine, these companies draw on operating leverage to show better operating profits. And also cost of money was very cheap, remember, till about, almost about 8 to 9 months back. And therefore, there was a fair bit of financial leverage which was also helping them, because most often than not, these companies have reasonable amount of debt on the balance sheets. They're not high cash flow generating businesses. So a combination of operating leverage and financial leverage was expected to add to a huge amount of accelerated earnings growth for them. But mind you, both of them are reversing. We could be seeing interest rate reversals as early as today. But in any case, cost of capital for these companies is already fairly high from the bottom. And because of commodity rallies around the world, I think operating margins for these businesses will also be hurt, again, because of the fact that they don't have such a great pricing power as some of the larger companies in corporate India do. So, even from that perspective, the news is not very good.
Okay, could you sort of, without, I know you can't name names, but what is the construct you would look at, numerical construct you would look at to identify mid-caps? I mean, if you were to run a screen, because I mean, quality of management, quality of franchise, I mean, okay, those are understood. But to run a screen on mid-caps and look at, okay, I mean, as a starting point, and then you investigate further whether it makes sense to buy, what would those parameters be, Ajay?
Sure. So I think there we try to keep it simple here, and what we've realized is that there is no point giving a loose rope to mid-caps and working under the assumption that, look, they're smaller companies, once they grow, hopefully things will fall in place for them. Because if you start going down that track, you would inevitably commit mistakes. So the rule book tells us that focus on secular growth drivers, focus on ability of businesses to generate cash flows. Now, they could be, the cash flows for mid and small cap companies could be a little more volatile, but that's okay. We should still see a very clear path in the next few years towards strong cash flow generation and strong ROCs, because we've realized that, ultimately that is the way businesses generate economic value, and that economic value translates into wealth creation for investors. So I think the rule book still pretty much tells us the same thing as we would look for in any large cap company. But yeah, on the management quality that you just mentioned, we usually tend to be a little more cautious because many of these companies either don't have a very long-term track record, or at least it's not available for us to look at from a few economic cycle perspective. Having said that, let me also add that even in an environment like 2011, 12, 13, when mid-caps were being punished, we did see a whole host of mid and small cap companies that did very well because their profits were growing, their cash flows were growing, and they were generating huge amount of wealth for investors. So from that perspective, when I say that we are circumspect about the mid cap space, it doesn't mean that we would vacate those hunting grounds for our funds. We are still pretty much there, but it's more of a generic narrative in terms of mid caps versus large caps, and where both of them are placed in terms of their valuations, and therefore the short-term outlook over the next 6 to 12 months.
Okay, all right, Ajay, we're going to leave it on that note. Thanks very much for joining in and giving us your view on the mid-caps. Well, the big Q for today has to be the rate decision by the Reserve Bank of India, and a lot of economists are not putting it past that it could probably be a rate hike as well. Lata spoke to Chetan Iyer of Morgan Stanley earlier in the day, and he rules out a possibility of a rate hike by the Reserve Bank of India today, though it is expected possibly in the August policy.
We don't expect the central bank to hike today. Of course, there's always a possibility. But I think looking at the fact that the underlying inflation trend in India is fine, and ultimately that has been the framework that the central bank has provided us. So looking at the trend in inflation, particularly food inflation, which is a big component, it doesn't worry us that the underlying inflation trend is quite okay. On our forecast, we expect the core inflation in India to be going to around 4.3% by March 19. So we think that the trajectory is looking comfortable with the facts that we have. But if you do see a big problem on oil, and oil shoots up in a short span of time, then there will be that inflation pressure which the central bank will have to consider. Okay. But I think with the facts that we have, we think they should probably hold today, sound a bit more hawkish and say that, look, that easy monetary policy condition that we had so far is done, and one should be prepared for interest rate hikes in future.
Okay, so a hawkish pause would be more like it today.
Correct.
But for 2018, what are you expecting in terms of rate increases from the Reserve Bank? Will it come in August? Will there be more?
So we see one base case rate hike in last quarter, but we do appreciate the fact that oil prices have moved a bit higher than what we were building in our forecast, and so there is a risk that they could do a rate hike in August.
Okay. Oh, in August. But you only expect one and done?
No, we're expecting 2 more. So in all 3 hikes in our forecast horizon. So it will be a shallow rate hike cycle. Unless you see a big misallocation or redistribution by the government before election, which then brews up inflation in 2019.
Well, some positive news which just filtered in on Glenmark, where they have received approval for an oral contraceptive drug. Don't know which plant they've received the approval from, but you can see that the stock is spiked up to the high point of the day. Remember that when it opened for trade, it was down 3%, so it's been quite an intraday recovery. For the markets as well, doing well. So the Nifty is at 10,650 plus, and the mid-cap index is up over 100 points as well. Well, with that, it's also a wrap on Trading Hours. Stay tuned. Halftime report just after a short break.